You've so eloquently stated that you can't see who's swimming naked until the tide goes out. Could you discuss the issue of trying to employ a rational decision-making process in investing or in business generally, as opposed to focusing on outcomes or results of just a few instances or over a short period of time? For example, it may not be a good idea to underwrite some insurance policies if competition has lowered the premiums too far, and likewise in the stock market, momentum investors may get good results for a while, but buying high and trying to sell higher isn't a good long-term strategy. So I'd just like to hear you guys provide some detail on the importance of using an effective decision-making process, even though it may lead to some bad outcomes and underperformance in the short run.
Well, Ben Graham said long ago that you're neither right nor wrong because people agree with you or disagree with you. In other words, being contrarian has no special virtue over being a trend follower. You're right because your facts and reasoning are right. So all you do is you try to make sure that the facts you have are correct, and that's usually pretty easy to do in this country. I mean, the information is available on all kinds of things. Internet makes it even easier. And then once you have the facts, you got to think through what they mean. And you don't take a public opinion survey. You don't pay attention to things that are unimportant. I mean, what you're looking for is things that are important and knowable. If something's important but unknowable, forget it. I mean, it may be important, to know whether somebody's going to drop a nuclear weapon tomorrow, but it's unknowable. It may be all kinds of things. But so and there are all kinds of things that are knowable but are unimportant. In focusing on business and investment decisions, you try to you narrow it down to the things that are knowable and important, and then you decide whether you have information of sufficient value that, compared to price and all that will cause you to act. What others are doing means nothing. It's price and all that will cause you to act. What others are doing means nothing. It's what Graham writes in chapter 8 of The Intelligent Investor, that the market is there to serve you and not to instruct you. That's of enormous importance. When people talk about momentum in stocks or charting or any kind of things like that, they're saying that the market is instructing you. The market doesn't instruct us. The market is there to serve us. If it does something silly, we get a chance to do something because it's doing something silly, we do it. But it doesn't tell us anything. It just tells us prices. And if the price is out of line with where the facts and reasoning lead you, then action is called for.